Donald Trump just made some major changes that will affect all credit unions nationwide. And now a court ruling could wipe out protections that millions of credit card users rely on every single month. These changes aren't just political moves. They could directly impact how much you pay in credit card fees and how your credit union operates. And believe it or not, you got to ask yourself whether your money is truly safe. Let me show you what's really going on and why it matters more than you think. First up on the list is the Consumer Financial Protection Bureau, or also known as the CFPB for short. Now, for those who don't know, this is the agency that was created after the 2008 financial crisis to make sure that banks, credit card companies, and lenders treat consumers fairly. Now, if a company overcharges you, for example, charges you hidden fees or breaks the rules, the CFPB is supposed to step in and hold them accountable. But now that protection has been shaken up to the core. And we've been talking about this for like the past couple months. Here's what just happened. Over 1,500 employees, which is about 90% of the entire staff. It's only 200 people left. They were suddenly laid off with no advance notice. That's nearly the entire agency gone in one snap of a finger. Real quick, be sure to download our free ebook today. All you gotta do is scan this QR code right here or click the link in the description below. Now back to the video.
Tens of thousands of federal employees were laid off in recent weeks.
We were leaving work fully employed and coming back the next morning without a job.
But now the terminations are being challenged in court, and the administration has been ordered to issue sweeping job reinstatements.
Two federal courts on opposite coasts taking similar cases and coming to similar decisions here, ruling that the firings of so-called probationary workers were improper mass firings and ordering that tens of thousands of these workers be put back on their jobs.
It's unclear when reinstated employees will be asked to return to work, as some are reportedly being put on administrative leave. The Trump administration has also moved to dismantle entire agencies, such as the Consumer Financial Protection Bureau, the U.S. Agency for International Development, and the Department of Education.
Now, what makes this especially scary is that these layoffs weren't phased in like a gradual way or like paired with like a new plan. They happened almost overnight. That means fewer people watching over banks, fewer people responding to your complaints, fewer people making sure your rights are protected. The second massive change that Donald Trump just made is something that's not getting enough attention. The National Credit Union Administration, also known as the NCUA, this is the main agency that oversees credit unions across the country, making sure that they're operating fairly and protecting members like you and me. But just recently, President Trump removed both of the Democratic board members who've helped lead the agency, leaving only one person in charge. And it just so happens that that person is a Republican. Now, I don't care who you voted for, but here's what you need to know. Why does that matter? Because the board needs at least 2 members to vote on important decisions, approve new rules, and of course, respond to emergencies. With just one person left, the NCUA really can't do much right now. This creates kind of a freeze where credit unions may be left without updated guidance or protections during a time where major changes are happening right now in the financial world. Here's the thing. When the watchdog is weakened, it's the members who can end up paying the price. The third change that Donald Trump is making has to do with credit card late fees. The Consumer Financial Protection Bureau, as we talked about, the CFPB, they recently introduced a rule that would cap credit card late fees to just $8. The idea behind it was to protect consumers from being charged like $30 or $40 or even more for just missing a single payment. Now, that sounds like a win for everyday people, right? No.
We are back with a new plan that could help consumers save billions of dollars on credit card charges.
The Consumer Financial Protection Bureau is capping credit card late fees at $8. Right now, credit card companies can charge as much as $30 for a first late payment. The agency says cutting fees will save consumers $10 billion.
Caleb Silver, editor-in-chief at Investopedia, joins us now. Hi, Caleb. Look at that fancy background. He's in London. We miss you over here. All right, tell us what this new rule means for consumers and who, those who might be making that late payment. What's it going to mean for them?
Well, it means lower fees, and the credit card companies have been getting away with what the Biden administration and the CFPB calls junk fees for years through a loophole in the Card Act from 2009 that limited the amount that credit card companies could charge only if they charged $25 on the first late fee and then up to $35 or even $41 for subsequent fees adjusted for inflation. So if fees go all the way down to $8 for late payers, especially for the credit card issuers with 1 million or more customers, that's a very big deal. That's a big savings. The Biden administration saying it's going to save households about $220 per year. That's a full trip to the grocery store for many.
So credit card companies and industry groups, they pushed back hard. They filed a lawsuit recently claiming that the CFPB didn't fully think this through, especially when it comes to late fees.
Trump administration has scrapped an $8 cap on credit card late fees. The Consumer Financial Protection Bureau introduced the cap last year, saying it could save households $10 billion a year. But after pressure from banks and a legal challenge, the Bureau reversed course, calling the cap illegal. And a federal judge in Texas has officially thrown it out. Consumer advocates say the move opens the door now for banks to charge excessive fees.
The Consumer Financial Protection Bureau, or the CFPB, is supposed to, well, protect consumers. That sounds like an uncontroversial mission, but the agency has faced several threats in its short life.
There's no oversight.
Fundamentally flawed.
Arguably the most unaccountable agency in the history of the U.S. federal government.
And now,
Trump and Musk want to just take that agency away.
Here's what the CFPB does, why Republicans have wanted it gone, and what happens now for everyone with bank accounts. The CFPB was a response to the 2008 financial crisis. At that time, consumer protection was spread out through 7 agencies, all overseeing different parts of the laws.
We ended up with a pretty weak system of consumer financial protections that really allowed predatory lending to flourish, and that's part of what sent us into the 2008 financial crisis.
So as part of the Dodd-Frank Wall Street Reform Act, Congress created the CFPB. It consolidated the oversight of consumer financial laws, centralizing authority into a single agency.
Basically, the Consumer Financial Protection Bureau will be a watchdog for the American consumer.
Its main job is oversight. Using data collected from banks and financial companies and consumer complaints, the CFPB can investigate fraud.
When companies break the law, they can take them to court. They can distribute those penalties to consumers, right? They've put about $21 billion back in the pockets of over 200 million consumers over the last 14 years.
The Bureau can also look at that data to create new regulations, like its proposal to exclude medical debt from credit reports, or cap the amount a bank can charge for an overdraft fee.
What we found was that big credit card issuers were exploiting a loophole for years and years.
They're pretty much saying that late fees are meant to discourage people from paying late in the first place. All right, now check this out. A federal judge sided with them. The court said that the CFPB's rule might actually violate the Card Act, which is a law meant to keep credit card practices fair. Basically, the judge says the $8 fee cap didn't take into account whether it would still motivate people to pay on time. So what does that mean for you and credit unions? Well, let me break it down. It means that credit unions may have to go back to charging higher late fees if the $8 cap doesn't stick. And it also shows how uncertain things are right now when it comes to consumer protection. 1 minute you're told you're going to be protected from big fees, and the next minute that protection disappears. Now, here's the thing. I truly believe that more changes are on the way, and this is just the beginning of what's more to come. Let me know your thoughts in the comments section below. Either way, I'll see you on the next video.